Hello, everybody. Thank you so much for joining us for today's Skillshare on setting up your farm's bookkeeping system, tools, and tips. My name is Sonia Lockhart. I'm the Community Engagement Manager at Black Farmer Fund, and I'm really excited that you all are joining us this afternoon. I'm sure we'll have more people rolling in as the session starts, but we're super pleased to have Mujahid here to lead the session today. Before I introduce him, I just wanted to share a little bit about Black Farmer Fund for those of you who may be newer to our work. Black Farmer Fund is a nonprofit community investment fund whose mission is to nurture Black community wealth and health by investing in Black agricultural systems in the Northeast. We provide funding in the form of both gifts and low-interest loans to Black farmers and food business owners across the Northeast region of the U.S., and we pair this funding with technical assistance as well as community engagement opportunities for networking, learning, and building relationships across the region. And as the community engagement manager with Black Farmer Fund, one of the opportunities that I am responsible for are these monthly skill shares, which we host on a wide array of topics over the course of the year, really just based on what our community is interested in learning about. And bookkeeping was definitely a huge interest, so we're super happy to be able to put on the Skillshare this afternoon. So now I want to introduce you all to Mujahid Layton, who will be leading the session today. Mujahid has 25 years of experience in the financial sector. He has worked as a bookkeeper, certified QuickBooks Pro advisor, and chief financial officer for businesses of all sizes. His knowledge of finance has made him a reliable partner for many organizations, helping them manage their money effectively. Mujahid is now a farm owner and manager, where he uses his financial skills in agriculture. He still works part-time with a few clients to stay connected to bookkeeping and financial management. His combined experience in finance and farming gives him a unique perspective, making him a valuable resource for any business he works with. And now, without further ado, I will hand it over to you.
All right, thank you kindly. Yeah, so let's just hop right in, setting up your farm's bookkeeping system. So there was already some stuff to share. One more thing about me that I'm interested in all things alternative, alternative, cooperative, and
Sorry to interrupt. It's
yeah,
a little bit muffly. I don't know. Maybe if the headpiece was closer, I'm not sure if that'll help.
is it better now?
It's a little bit better. It's still a tiny bit muffled.
One second. Um, how about now?
That's better.
But is that
Thank
better?
Yeah.
Okay. Good. So I was just saying that in addition to my experience, I'm also interested in all things related to alternative economics, solidarity, cooperative, and all economics. Our farm is a seed farm, and we've been building farm for 5 years. Uh, this one. Okay, so what is bookkeeping? Bookkeeping is simply how you track the money that's coming in and out of your business. It's pretty much that simple. I mean, but what is the importance of bookkeeping?
Sorry, we have a few people saying that they can't quite hear. I'm so sorry.
Okay, 1 second.
Okay.
Is it better now?
Possibly, but now it sounds a little too quiet.
All right, can you see that?
Still a bit muffled.
Hmm. Okay. Um,
I'm wondering if, are you using phone audio or computer audio?
using no, you're using computer audio.
I'm wondering if calling in
Okay.
could be an option. It might be a clear connection.
Okay.
Um, and I can support if you need help figuring out how to do that.
Give me a second.
Yeah, no rush.
Okay, can you guys hear me now?
Can you say that one more time?
Uh, is the audio better now?
Yes. Yes.
Okay. Okay, my apologies about that. So let's just get started. So we were talking about what is bookkeeping. So basically, bookkeeping is keeping track of the money that's coming in and the money that's coming out of your business. Why is it important? Because it helps you manage your income, helps you manage your expenses. It helps you with financial planning and decision making. So if you need to prepare budgets, if you need to prepare a farm forecast, helps you understand what's happening in your farm so you can make better decisions about um, price points, budgeting for labor, budgeting for amendment fertilizers, things like that. It also helps you with tax prep and compliance. Compliance could be a tax audit. It also could be related to an audit of insurance or payroll or sales taxes. And it also helps you prepare for access to capital, either working with bankers or investors. Can everyone see my screen?
Yep. Yeah, it's on the key terms
Okay.
and concepts. Yep.
All right, very good. So we're going to talk about some key terms. So when we're talking about bookkeeping, there's going to be some specific language. So there's just a few terms that we need to understand so that when we get into recording our transactions, the money coming in and coming out, okay, that we are making sure that we're recording those transactions to the right account. So there are basically just 5 kinds of accounts that we need to keep in mind. So those are related to assets, liabilities, equity, income, and expenses. Okay, so assets is real simple. Basically, that's anything your farm owns, right? So that'd be cash in the bank, if you own your land, if you own your equipment, all of those things are assets. Liabilities, those are going to be the things that you owe to other people or to other businesses, okay? And that could be payroll taxes, sales taxes, loans, or unpaid bills, also called accounts payable. And then there's income. That's pretty simple to understand. That's the money that we earn when we sell crops or sell livestock or value-added products. And then there are the expenses of the business, and there are different kinds of expenses. There are the expenses related to producing crops, producing livestock, but then there's also the general administrative expenses of the business, like paying utility bills or paying for communications, or if you rent anything, paying for that. And then there's equity. So equity is simply taking the total of your assets, subtracting your liabilities, and that's taking everything that you own and subtracting what you owe, and what's left over is what you have. And that's also the value of the business to you as the farmer. So any questions about these terms? Any clarifications that I can make on these things? Okay. All right, so let's move on. So we have a few more terms. So when you start your bookkeeping system, you have to choose what's called an accounting basis. And there's going to be just 2 options. One is cash basis, the other is accrual basis. Okay, so the difference between the two is that on a cash basis, you record transactions when the cash moves in or out of your account. So you pay for an expense, you record the transaction. Or you receive money from a customer, you record the transaction. Okay, but accrual basis does not follow cash. Okay, it follows the obligation. So let's say you sell some crops to a restaurant on credit. Okay, on an accrual basis, you'll recognize the sale even though you haven't received any cash. Okay, and let's say you have a vendor that you work with that gives you, say, that 30 terms, you have 30 days to pay, right? You'll record the transaction, you'll record an expense in your books even though you haven't paid it. So that's accrual basis. So one follows when cash actually moves, right? And the other basis is when there's an obligation either on behalf of the customer or on behalf of the farm. So most farms are going to follow cash basis accounting. Matter of fact, most businesses follow cash basis accounting. Generally, like larger corporations, they'll follow accrual basis accounting. Then there's also your calendar year. Most businesses, again, follow a calendar year, meaning that their accounting year begins in January and ends in December. However, some businesses choose a fiscal year. And so that could be a January, but it also could be March, it could be June, it could be July. And that would be the beginning of the accounting year. Again, most small businesses choose January as their accounting, their calendar year and fiscal year. And then there's just some explanation around the 3 main financial reports. So the profit and loss, these are
financial statement is going to contain both your income and expense accounts, right? It's going to tell you was the business profitable over a period of time. So that could be for the month of July, that could be for the second quarter of the year, or it could be for the whole year. But the profit and loss is always going to show you the profitability of the business over a period of time. The balance sheet, on the other hand, is going to show your asset accounts, your liability accounts, and your equity accounts. Okay, and it's always going to be a specific date and time. So it won't be over a period of time. It will always be what is the value of the business on a specific date, like today. Okay. And then there's the statement of cash flows, and the statement of cash flows basically just shows you how cash was used in the business over a period of time, similar to the profit and loss, except instead of looking at income and expenses, it's just showing where did the cash come from, where did the cash go, okay? And that's the purpose of that report, to show you how cash is flowing in the business. Okay, so when setting up the bookkeeping system for your farm, okay, you're going to start with choosing a bookkeeping system, right? So there's basically three choices. Software is the most popular choice, and then some farms are using spreadsheets. So there's lots of options for spreadsheets. And then how bookkeeping began with physical books and records, generally called ledgers and journals. We won't be talking about that today, but that it still is an option for those who know how to use their debits and credits. The second step would be to set up a chart of accounts. And we have a handout for you guys today that is a template chart of accounts for a farm business, so you guys can get some value from that. And so we'll have a demonstration on how to set that up today. And then the next step would be setting up your beginning balances. And this is like really important because it's going to be tied to when you decide to start bookkeeping for your business. Okay, so let's say you're farming for 3 years. You haven't been keeping books, or you haven't been keeping good books. You decide, hey, I need to start keeping books. So you say, well, I'm not going to go back 3 years, but I'll go back to the beginning of this year. So let's say January 1st. So you go to your bank statement and you see you had $2,500 in the bank on that date. So that would be the beginning balance. Alternatively, you may be a farmer that says, well, you know what? I want to have the complete picture over the whole history of the farm business. Let me go back to that very first bank statement, right? And so that beginning balance would be the opening deposit you made, okay, when you went to open up the bank account. Okay, and you'll have that not just for your checking account or your savings account, but you'll also have the beginning balances, the loans that you have, or any credit card accounts that you have, or any line of credit accounts that you have. Okay, if you have employees, you'll have beginning balances for that, because if you've been in business for some time, but you're just starting your bookkeeping recently, you'll have maybe some unpaid payroll liabilities that you need to create the opening balances for. So it's a little work with getting all of those statements together, but once you get all of those documents together, then you can set up your beginning balances. Then, because we're using software as in our example today with how to set up your bookkeeping system, you'll connect your bank accounts to the software. So the software today allow you to connect your bank account to them. And the benefit of this is that those bank transactions are downloaded into the software. So before this was available, bookkeepers would simply just manually enter all the transactions into the books, into the software. But now softwares like QuickBooks, they'll just download into what's called a bank feed. And from there, you can go ahead and categorize your transactions in your books. So once you've connected your bank accounts, yeah, if we have a question, let's take that.
Yeah, thank you. I'm Will Moss. I'm a farmer in Western New York. You talked about how you can integrate the banking information and download it into the software. Are there any like issues of compromise, like security, like issue? As a farmer, I mean, I would be very worried about that as far as our revenue asset information being out there and the cyber world. So I don't know if that would be an issue where, every now and then we get this breach of data where outside criminal activity could steal our information and see what's out there.
Yeah, that's a great question. And the answer is no, there's really not a concern there. There are millions, literally millions of people who are using like these softwares like QuickBooks. The encryption security is incredibly strong. It's not just like bank level security, it's like government level security. And there haven't been any reported incidences of like hacking of these systems. So I don't quite know like the specifics of the security protocols, but those security protocols are actually outlined on the software website. So if you went to QuickBooks.com, for example, and you were to search for security, what is the cost of QuickBooks? We'll get to that. It will outline for you exactly what are the protocols that they take to secure their clients' data. Now, there is, just for transparency, you are sharing your data with a third party. So once you decide to connect your account to QuickBooks, then you're sharing your data with QuickBooks. So the people who work inside the company do have access to your data, but it's like a silo. So only people who need to have access to your data has access to your data. And they have very robust hiring just policies and processes to make sure that they're not hiring people with criminal backgrounds, as an example, or unfavorable financial practices be like discovered on a credit report, as an example. However, there is a workaround for that. So if you did not want to connect your bank account to QuickBooks, what you could do is log into your bank account, and you could download all of your bank transactions into an Excel document, specifically CSV format. Then you can open up QuickBooks, and you can import the data from that spreadsheet, bypassing connecting your bank account to QuickBooks. So there is a workaround for that. So if you want to connect your bank account to QuickBooks, it's easy to do so. It's safe and secure to do so. There haven't been any issues with that over, I don't know how many years it's been, maybe 10. And but if you still have concerns, you can just bypass it altogether by downloading your data into a CSV file and uploading it into QuickBooks from there, bypassing the connection. So there was a question about what is the cost of QuickBooks. If we have, based upon how much time we have, we're about halfway through, so we can come back to that at the end. But it starts as low as $20 and goes up to like over $100, depending on the version you have. For a farm business, the cheapest option they have is more than sufficient to keep track of a farm business. Okay. How does it account for cash payments? We'll show you that. We'll have some examples of that in our demonstration today. Okay. So after we connect our bank accounts or not, we'll start recording our transactions. Okay. And then after we record our transactions, the next step in our bookkeeping is that we reconcile our accounts. So basically, this is taking the bank statement that we get at the end of the month or at the end of the banking period, and then we take a look at the transactions that we've recorded into our accounts, and then we say, okay, do these transactions agree with each other? And if they do, we have a reconciled account, and we'll go through that process today as well. The next step is to look for unusual or unexpected balances. So what happens is when you're reconciling accounts, you discover unusual or unexpected transactions or balances, but there are some accounts that don't get reconciled that you need to take a look at. And so that's accounts like accounts receivable. That's an account for people who owe you money, or accounts payable. That's an account for people you owe money to. So you just review those accounts, make sure there's nothing that looks off. The next step is to gather your financial reports. So that's going to be your profit and loss. That's going to be your balance sheet. That's going to be your statement of cash flows. You'll review those financials. You'll do some analysis on the financials, and it'll help you understand exactly what happened in your farm business over the period that you're looking at, like what happened with the business last month, what happened with the business over the last quarter, what's happened with the business this year to date, or all of the above. Then the last step is closing your books. So that's sort of like putting a seal, like sealing books from changes, right? So we'll show you that in QuickBooks where sometimes it actually happens more often than you would think. People make changes to historical data, changing the accuracy of their financial reports. So closing your books, and then the last step is rinse, wash, repeat, where you repeat the process over and over, month by month. So with that, let's go ahead and open up QuickBooks. And give me 1 second. Okay. So this is a demo file. I set up this file specifically for this Skillshare. And after you subscribe to QuickBooks, this is the window that you'll get. So this is the page you'll see. The first step you want to do is go to your settings in the software. Now, if you're not using QuickBooks, like if you're using another software like FreshBooks or something else, the user interfaces are all very similar. 90% of what we cover in QuickBooks is going to be applicable to other software programs as well. So even if you're not using QuickBooks, a lot of this information is going to be the same. Okay, so I see a question here. So the first 5 steps, yes, yes. The first 5 steps are done once, and then the remaining steps are repeated month after month. Thank you for the clarification. Thank you for the question. Yeah, so again, you click on your settings, and then you want to go to this column that says your company, and then you want to go to what's called account and settings. Okay, so you just want to put some final touches on your setup before getting into the next step, which is your chart of accounts. So you'll see under account and settings, there's a few tabs here, one for company, usage, expenses, time, and advanced. Okay, so the name of this business is 400 Quarts a Farm. Does anyone know what that's a reference to? Okay, that's a quote from Fannie Lou Hamer, who said if you have 400 quarts of gumbo and what did she say? Something else stocked up, no one can tell you what to say or what to do. So that's where that comes from. So you can put your company logo, your farm logo here, right? You put in your company name. And then sometimes the legal name may be different. So maybe you're organized as a sole proprietor, but you have a DBA, doing business as. So if you're like a sole proprietor, your farm name may be one thing, your DBA, but your legal name may be your personal name. Okay. So after you communicate to QuickBooks, if it's the same or not, then you set up your EIN. That's your employer identification number, which is issued by the Internal Revenue Service. There's a link at the end of this presentation for those who may be interested in going about how to go about getting your employer identification number. But if you're legally organized as a sole proprietor and you don't have the EIN, then you would enter your Social Security number. If you're organized any other way, you should already have an EIN. So you put that information in and save, okay? Then the next step is to set up your company type. And this is based on how you're legally organized. So are you a sole proprietor? You're going to be filing Form 1040. Are you a partnership or LLC? Are you a S Corp or a C Corp? Are you a nonprofit? Okay, if you're not sure. In this case, we're just going to go with sole proprietor. And then we'll put in our industry. So we'll say farming. Okay, so there's some options here. We'll just use farming and then click save. Okay. So then there's the contact info, and you'll notice that there's the company email, which is sort of like your administrative email. So this is the email that you use to log into QuickBooks. But there's also a customer-facing email. It can be the same. That's not a problem. But if you have a different email that you use customers, you can set that up, put in your phone number, put in your website, okay? You can put in your company address, and then you may have a customer-facing address. You can put that in, and then there may be a different legal address. And then there's just some marketing preferences. So from there, you move on to your next setting, which is your usage. So in this case, this is just a single user account. So I'm already at my capacity for users. Some different editions of QuickBooks, you can have up to 3 users, you can have up to 5 users, you can have up to 20 users, okay? And then you also have limitations on your chart of accounts. So right now we're using 44 out of 250 accounts. This is like overkill. There's really no reason for any farm business of any size to have 250 accounts, but there could be an exception to that. So that's just information on like where you are with your usage limits. And then there's information on expenses. So there's this option in this particular version of QuickBooks for what are called tags, okay? So I'm going to turn this off, but a tag is specifically for like tagging transactions. So let's say your farm has more than one location, okay? And so maybe you want to have a tag that says location 1, and then you have another tag that says location 2, okay? So that's an idea of how you could use this for your farm. And so when you're recording the transaction, you could say, okay, this transaction is associated with location 1, right? And some other transaction is associated with location 2. Then there's this option here for purchase orders. This is actually stealth advertising, right? This is just something here that's really not relevant to like encourage you to think that maybe you need to upgrade. Because one of the things about QuickBooks, you have to be like really mindful of what you're reading or what's being communicated to you, because they're really good at like trying to get you to upgrade. So if you ever see a message about upgrade, just know that it's a marketing message and really not tied to your settings, unless this is a feature that you actually need. In this case, most small businesses, most small farms aren't using purchase orders, okay? There's options or settings around time tracking. This is if you have employees in your farm business. So basically it's just setting the first day of the work week. It could be Sunday, it could be Monday, it could be some other day, and then some timesheet options. Lastly, there's some advanced settings. So this is where you set your fiscal year. So this right here is set for January. Okay, so the first month of the income tax year, the same as fiscal, which will be January. The accounting method here is going to be cash versus accrual, okay? And then we're going to turn on the option for closing our books. So we're going to close our books as of July 31st, but we'll do that after we do all the bookkeeping for the month, okay? You can also set up the tax form. So this being a sole proprietor, we're going to choose form 1040, and we're going to say that there's an option for setting up account numbers. So that means all of your accounts, your assets, your liabilities, your income accounts, your expense accounts will have unique account numbers. You can use this or not. That's pretty much sort of like a user preference. But this one part here about automation, I recommend everyone to turn this off. So if you leave this on, QuickBooks will think for you about what goes where. And my experience is that doesn't always work out well for you. So just turn off the automation with respect to automatically applying credits, automatically applying bill payments. You don't really want QuickBooks doing that, especially if you're a new user to the program. Even an experienced user. In my own QuickBooks, I have all this turned off. QuickBooks is multi-currency, but you'll choose the US dollar, it defaults to that. This business network, basically, if other people, like other businesses you're doing business with, also use QuickBooks, this is like, you can say you want to allow other people to find you. If that's the case, then they won't need to like request your bank account information. So they need to send you a payment. It'll already be in the system, and payments will come to you automatically. And then just some simple date formatting, currency formatting, labels. Let's say you have a CSA program. Maybe you want to change the customer label to members, right? To represent, okay, these are CSA members. Okay. And then some options around warnings, like if a duplicate check is used, or a duplicate bill number is used, or a duplicate journal entry. Okay. And signing you out if you're inactive over some time, 1 to 3 hours. Okay. So those are the account settings. Any questions about anything we just covered before moving on to the next part? Okay. So, the next thing we're going to do is take a look at our chart of accounts. So I've already set up the chart of accounts in the interest of time, but we will add 1 or 2 accounts just to show how that's done. But your chart of accounts is really the backbone of your accounting system. You can think of it as a file cabinet, if you will. So you can get to the chart of accounts from this sidebar here. So under transactions, you'll see chart of accounts. And you can add a little bookmark so it's easy to get to in your bookmark section. Okay. So I've set up a bank account here. I've called it George Washington Carver Mutual, right? So this is an account we'll get to in a couple of seconds. But this is the full list of the accounts. So this has all been set up with a farm business in mind. So there's an account for petty cash, there's an account for receivables, people who owe you money, and then there's inventory accounts for crops. This is a default inventory account. It always happens no matter whenever you set up a new QuickBooks file, it'll create its own inventory account. But there's also one for livestock and prepaid expenses. So any expenses you pay in advance before they're due will be considered a prepaid expense. This uncategorized asset account, this is another default account by QuickBooks. So when you don't know what kind of asset the transaction is, you can just record it here and then ask your accountant later for help. And then there's accounts for your fixed assets. Fixed assets are going to be your physical assets, right? So like buildings, equipment, fencing, implements, land, tractors, okay? And then there are other accounts like other long-term assets, so like bonds, investments, and stocks. Now, a lot of farm businesses, I haven't seen one yet, use these accounts. So if you have accounts that you don't need, you can just mark them. You can come up to the top, and you can click on this batch actions, and you can make those inactive. So if there's in the template, if there are any accounts that you really don't need, you can just make them inactive. And you can just have the accounts that you actually need to use. Okay. So then there's accounts for accounts payable, like the people you owe money to. Okay, and then there's an account for current portion of long-term debt. So basically, the portion of debt that you'll have to pay within your current calendar year. Notes payable, so any loans that you may have. And then there's drawings, which are basically just distributions the farmer would take out of their business to pay themselves. Opening balance equity, this is another default QuickBooks account. And this is basically an account that QuickBooks uses when it doesn't know which equity account to post a transaction to. So when you're like looking for unusual and unexpected balances, this is sort of like an account you would take a look at and say, okay, is there anything in there? Okay, if there is, then where does it actually go? Then there's owner's capital. This is the money that you actually put into your business, right? So from time to time, you have to fund your business, and sometimes that money comes from you. That's what this account is for. And then there's retained earnings. So retained earnings is all of the net income that has not been distributed to the owner, right? So this is the net income that's been retained in the business. And so that's also an equity account. Now, you notice that there's these green buttons, they all say BAL, so that represents the balance sheet. And now we're switching over to these blue buttons, P&L. These represents your profit and loss accounts, okay? So billable expense income, that's a default account with QuickBooks. Then you have crop sales, dairy sales, dairy sales, government grants, grain sales, livestock sales, other income, poultry sales, sales services, and uncategorized income. Those are all default QuickBooks accounts and vegetable sales. Then you get into your cost of sale accounts, and your cost of sale accounts are always going to be related to the direct cost of producing your crops or your livestock. So the cost of crop production, the cost of feed and supplies, the cost of livestock production. Okay, those are the type of expenses that would get recorded there. Then you have your general expenses like fuel, insurance, interest on credit lines or loans, marketing, miscellaneous expenses, professional fees like legal or accounting fees, rent expense, repairs and maintenance, salaries and wages. Not sure where it goes, put it in uncategorized, utilities, and reconciliation discrepancies. You should really never be using that one. So this is the chart of accounts. Any questions about this? Okay. If not, let's record some transactions. So we're going to go to our bank feed. We're going to George Washington Carver Mutual. And then we're going to record some transactions, and we're going to need your participation. So we have 38 transactions that we need to record, okay? And so what happens is after you connect, let me just show you before we start getting into the transactions, how do you link your bank account to QuickBooks? So you just click this button here that says link account. And then QuickBooks is going to show you some common banks people use, okay? But if your bank is not listed here, you just type it in and QuickBooks will pull it up, okay? You enter your bank information, your username, your password. It's going to show you a list of your accounts with that bank. You choose that account, and then the next step is selecting a starting date. So if you're going to start your bookkeeping at the beginning of this year, you would choose January 1st, 2025 as your start date. And then QuickBooks will download all of the transactions from that date. Once that happens, you'll see that account linked here, okay? And you'll see all the transactions downloaded, okay? Another option we talked about earlier is just importing the transactions from, say, a spreadsheet, okay? So this, we also call this so this is under bank transactions. It's also commonly called the banking feed. And so this is actually an AI program. So what's happening here, you have these columns. So you have your date, the description of the transaction, who was paid or who the money came from, and then categorizing. And this is where the AI portion is happening. So the program is making assumptions about the category or the account that we would use for these transactions. So sometimes it's right and sometimes it's wrong. So when you're categorizing or recording your transactions, you have to make sure that you don't just rely on what the bank feed is showing you. You have to come in here and say, okay, this is right, this is wrong, and correct it. So we're going to record our first transaction. You can come off mute if you like, and you can tell me what account would we record this to? What account do you think we would record this to? So we bought some food today for $22. Can you set a QuickBooks account before your business is legally official without it? Yes, you can. Okay, so the payee here, so a lot of farmers are also foodies. So there are like, who knows, dozens and dozens of restaurants you may eat at. So what I like to do is just say restaurant as a vendor name, okay? And I'm gonna say that this was not related to the business. This was just, it was convenience. I had the business card in my pocket and paid for some food for personal reasons. This will be considered a distribution. So this is gonna get recorded to the drawings account, okay? So we're gonna go ahead and add that. Okay, so now we have some entertainment. Anyone want to take a shot at what account we would record this to? It was with Netflix.
Drawings also.
Yeah. So you could have a Netflix account for your for farming purposes, but Most likely it was a personal transaction, so we're going to record this as a owner distribution. It's going to go to the drawings account. Next up, we gave some charity. Okay, what account would we use for this? Any ideas? We sent $100 to Gaza Eats Foundation. What account would we use for this? It could be personal, but it could also be your business can give contributions. So we're going to demonstrate adding a new account. So you can add a new account on the fly. We're just going to call this contributions. And the account type will be an expense. So you'll see a list, so you can choose, is it an expense? Is it other expense? Is it an income account? Like what kind of account are we adding? And then there's some additional details. So this will fall under charitable contributions, okay? And I think I have, okay. And then we'll go ahead and click save. Okay, and we'll record that transaction. Okay, next up, we have some trash expense. Any ideas on what account we would use for this? So the AI is right. We would use the utility expense account. Okay, so now we have a loan payment. Okay, so what account will we use for that? What is a loan, right? We talked about loans. What kind of account is that?
Accounts payable.
Great try. It would be a liability account. Okay, so this would go to notes payable. Notes payable. Okay, we're buying some breeding stock. Okay, so when we buy breeding stock, what's happening? What is that to our business?
An expense or an investment.
It's an asset, right? So it's money going out. We're spending money, but it wouldn't be categorized as an expense. It's actually an asset that we're buying, right? So this would go under our livestock inventory. Okay. Next up, we've bought some soil testing services. Okay, so Savvy Soil Services. What expense? I think I gave it away. So what account would we use for that? Soil testing. Expenses. Yes, it's definitely an expense. And we're going to put that under cost of crop production because that's related to getting our soil just right so we can produce crops. So we'll go ahead and add that. Actually, it is an expense. The type of expense it is a cost of goods sold or cost of services. Okay, next up we have some fencing. Okay, any ideas on what account we would record this to, the type of account? Is it an asset? Is it an expense? Is it a liability? Yes, it's actually an asset. So this would go under fencing, which is a fixed asset account. So one thing to know about fixed assets, what makes them different from expenses is that the dollar value and its use on your farm. So if you spend more than $2,500 you have to automatically assume that it's likely to be a fixed asset if you're buying something tangible, okay? So this is fencing. This goes to infrastructure on the farm. That would be considered a fixed asset because of the price point. This was $2,500, right? So at $2,500, you have to start asking yourself, okay, this is not an expense. Maybe this is a fixed asset. Okay. Okay, great. So here's a great example of the AI getting it wrong. So we bought some hand tools, okay, and the AI thinks that it's related to fencing. That's obviously wrong. So where did we get our hand tools from? Farm Supply. So we went to Farm Supply and got some hand tools. What account would we use for this? It would be an expense account. Yes, very good. And this will go under what we have here. So we're going to add an account called Small Tools. Equipment is more like a fixed asset, right? So anything that we, like machinery and equipment. So we're going to set this up as an expense, and this is going to go under other business expenses, and then click Save. Okay, so we did have a bit of a late start because of the audio issue, and it's just a few minutes until the end. How are you guys doing for time overall? Can we go another 10 minutes?
Yeah, I'd say we can go, and then if anyone needs to hop off before then, we'll have the recording that we'll send out.
Awesome.
I say, yeah, take as much time as you need, and we'll just have the recording to send to people.
That's perfect. Thank you.
Mhm.
Okay, so next up is taxes. Okay, so the AI is saying that this is related to salaries and wages. We paid the U.S. Treasury, okay? So that's definitely not related to salaries and wages. What account would this go to? The answer is it depends, okay? So you could have been paying payroll taxes, but you could also be paying like estimated taxes, which would be like you're estimating how much tax you would owe at year end every quarter to make sure that you don't owe the IRS come tax time. So this is actually going to go under drawing, okay, because we're going to assume that this is estimated taxes. So we'll go ahead and record that. Okay, we have some sales. Okay, so let's take a look at our income accounts. Okay, so we have, this is really interesting. Okay, so it just says farm stand sales. Now let's assume that you sell, like on your farm, you have a combination of crop sales and livestock sales, right? So we have an account for vegetable sales. We have an account for livestock sales, okay, or poultry sales, so like we're selling some chicken. But how would we record this? Well, in QuickBooks, we have this option to split transactions. So we would click on the split button, and then we would say we had so much in vegetable sales, and we sold some chickens. We had so much in poultry sales. Okay, so the total farm stand sales was $3,000. We sold $2,000 in vegetable sales, $1,000 in poultry sales. Okay, so we're getting a complete picture, okay, of where the sales came from. Okay, and then we just click split and add. Okay, all right, we have some marketing expenses. Okay, very good. Marketing. Who did we pay for marketing? So we have Edna Lewis, who's our marketing consultant. Okay, so this is the right account. The AI got it right. So we're just going to go ahead and click add. Okay, so we have some software. So we're using QuickBooks. Okay, what account are we going to use? We would have a software account. That's not there. We're going to add it. That's going to be an expense. So we're going to create expense, and then that's going to go under other business expenses. And then we'll click save. So you can just add, if you don't have an account in your chart of accounts, you can just add it on the fly. Okay. Next up, we have some professional fees. Okay, maybe that was legal fees or accounting fees. I think in this case, we have a CPA. So we paid Booker T. Washington, CPA, for professional fees. We're going to go ahead and record that. Is food purchased during workday a business expense? Depends. So if you're working a full day, and you're buying food under that context, then yes. But you worked a full day, and you said it's food purchase, so like maybe that was lunch. But you worked the whole day on the farm, and then you traveled to town, and you ate at a restaurant, right? Is that going to be a business expense? No, that's not going to be a business expense. That's going to be a personal expense. Okay, so we have some travel expenses here.
Can I clarify
Yeah.
that?
Absolutely.
Oh, okay, thank you. My question really has to deal with if there's a delivery of our farm products that, in this case, that's like 12 hours away from our farm. During the course of that delivery, are the expenses incurred for food and beverage? That's a business expense? Is that 100% deduction via when it gets to tax purposes?
Yeah. So we won't be covering any tax questions in this workshop. So I would refer you to your tax accountant. But at the same time, I'm not entirely clear on the question. So you're saying that the food had to travel 12 hours to get to the farm?
No, what I'm saying is once we've cropped the food, then some of our produce is delivered to a location that is 12 hours away.
Yes. And so you've cropped the food, and it's been delivered to a location 12 hours away.
And
Okay.
actually, way is 7 hours.
Sure. So you buy food along on the way. Is that what you're saying, to eat?
Yes.
During the delivery?
Correct.
Yeah, that's a business expense.
Okay.
Yeah, that's a business expense.
That's what I thought for sure. Okay.
Yeah.
Thank you.
Yeah, no problem. So fuel expense can be similar to like eating out, right? There's like dozens of gas stations you can get fuel from. So best practice is just to say gas station, okay? And then record your transaction. Okay, some agritourism. So some people came out to the farm, okay, and pay some fees to be there. So we're going to record this as an income account, and our options are, I believe we have an other option. We could add an account to that, but we're just going to choose what we have here. These are the vendors. You don't need a vendor for that. What we need to do is get the right. Okay, that's why it wasn't coming up. So it wouldn't be other income. Other income we'll talk about. Go back. Second. Let's just scroll the list. How odd. Open up the chart of accounts. So I'm just taking a quick look at the chart of accounts. I'm taking a quick look at the income section. I know there's an account there for that. It's taking its sweet time to open. There we go. So, great. What kind of entertainment is business related? So this is a great question. At the end of this presentation, there's actually a farmer tax guide. It's produced by the Internal Revenue Service, and there's going to be a lot of information on what expenses are deductible, especially expenses like meals and entertainment, and when that applies. So we're going to put this under okay, other income. So there's two types. So this is not the best language to use, because other income is also is a specific language which could mean income that's not related to this business sales. But in this case, that's how it's set up. So we're just going to choose it. And we will add that. Okay, so the next item is a loan. So we received a loan of $100,000. Okay, what account are we going to use for that? Well, the AI just put it in for us. So that's going to be notes payable. Right? So we'll go ahead and record that. Are there services where a bookkeeper or accountant will meet to help you? Yes, there are plenty of bookkeepers and accountants that will meet with you to set up your books. What are the normal range of fees for that type of? Really depends on the bookkeeper or the accountant. If you hire a bookkeeper, but I can say if you hire a bookkeeper, it's going to cost a little less. If you hire an accountant, it's going to cost a little more. And if you hire a CPA, it's going to cost you the most. Are value-added products considered other income? No. So you can actually create. So one of the things I want to say this about the chart of accounts. So the chart of accounts is unique to your farm business. Okay. So one farm may have one checking account. Another farm may have 5 checking accounts. One farm may have no employees. Another farm may have 20 employees. So when you're talking about the things that you sell, the value-added products, you would actually create an income account for that. So you have an account called value-added product income. Okay. Other income, I'll give you a good example of what other income would be. Let's say you have a credit card and you get cash rewards on your credit card. That would be considered other income. Okay, so we have some fertilizer. The AI thinks it's related to fencing. Let's go ahead and get this recorded. Fertilizer. Fannie Mae fertilizers. Okay, so what account would we use for this? What is fertilizers for? Okay, that's going to be related to our cost of sales. So we're going to choose our crop costs account, and there it is, cost of crop production. Okay, go ahead and add that. Okay, we have some bank fees. Okay, so we bank with George Washington Carver. Oh, it's not in there. Okay. So this is going to be the bank fees account. There should be any. There's no bank fees. Okay. So we'll need to add an account for bank fees. Let's go ahead and do that. Oops. You can also say like bank charges is another term you could use. Bank charges. This will be an expense type of account, and the detail will be bank charges. And then you click save. How do you find an accountant that understands Schedule F? I'm in an urban center where the accounting service is available. Don't encounter these requests. Yeah, Schedule F or Schedule Farm, your farm schedule. So The Schedule F is like the Schedule C of the farm world. So there is a database on intuit.com. It's called the Pro Advisor Database. And you could find someone who specializes in QuickBooks as an example. And then also you can add like additional criteria. Find me an accountant that also knows Schedule F. So that's one suggestion. Otherwise, I would like just maybe use like a search engine and say like farm accountant, farm tax preparer. That may get like a local near me, those kinds of searches, and you may find someone that way. So I'm add, just like you're gonna add accounts on the fly, you can also add vendors. So there's George Washington Carver Mutual. We'll just go ahead and save that. Okay, and add. Excavator rental. Okay, so the AI believes this is rent expense. Is that correct? Oops. Any ideas? Is this a rent expense? So it's an equipment rental, an excavator was rented. Is this a rent expense? It's actually an equipment rental. And we're going to add that account on the books. Is there no rental account on the books? No. Equipment rental. We'll go ahead and add that. That'll be an expense type account. And there should be equipment rental, and then we'll click save. Okay, I'll add that. Okay, insurance. Okay, so we bought some insurance from Vanguard Insurance Company. The AI got it right, insurance expense. Let's go ahead and add that. Farmer market sales. Okay, we sold something at the farmer's market. So we'll just say we focused on vegetables that day. So we'll record that to vegetable sales. And then we had some more vegetable sales. So we'll go ahead and record that. And then we sold some chickens. Okay, so let's go ahead and record that. Question, what about honey? Like honey sales? Yeah, you can have an income account called honey sales, no problem. Just simply add it to your chart of accounts. Even in addition to adding a honey sales account, you can also have a cost of goods sold account specifically to the cost of producing your honey, so that you're tracking both the costs related to producing the honey and the revenue you get from selling the honey. So this way you can understand just how profitable your honey business is. Well, beekeeping, what about classes? Yes, you can add an income account for class income. Okay, you can have an account for honey sales. You can have an account for class sales, okay, or classes income. You definitely can do that. So we have some utilities. Okay, did we have a utility company here? FUBU Utility Cooperative. Okay, so the AI got that right. We'll go ahead and add that. Marketing. Okay. So we already paid Edna. Let's pay Emily Meggett. Emily Meggett is our marketing and advertising consultant. She's handling the marketing and advertising for us. Does anyone know who Emily Meggett is? Emily Meggett wrote the cookbook, Gullah Geechee Home Cooking. Oh, thank you. Okay, so we have some insurance expense. Okay, so I'm sure AI got that right, no problem. That's Vanguard again. Repairs and maintenance. Okay, so the AI got that right. So who did we pay? We paid Randy's Repairs. Thank you. Okay, so we're almost done. We have some fuel expense, so the AI got that right. Who did we pay? Well, we paid a gas station for some fuel, right? Because there's too many gas stations to name, so we'll just create a common name. Some compost. So the AI thinks compost is related to repairs and maintenance. It's wrong. So we need to find the right vendor, and we need to choose the right account. So this will be a cost account, right? So compost is related to the cost of producing crops. So we'll choose the cost of crop production account. Oh, okay, a distribution. So we're taking, we as the farmer, we need to get paid, okay? So we're taking a distribution of $2,000. So we're going to do that on the drawings account. Okay. There's a salary. Okay. So there's different kinds of, so what did we pay for salary? Let's see. We'll just leave the name blank for now. It's not, we'll just get that, but let's get the right account. So salary and wages, the AI didn't get that. We'll just go ahead and add that. And then there's contract labor. So for some reason, the AI is reading this memo and thinks it's related to inventory. Wrong. So we paid Cesar Chavez for contract labor. Oh, is it? You don't have an account for contract labor? Okay, let's add it. I could spell. All right. So we're going to add the account for contract labor. What kind of account do you guys think this is going to be?
Payroll.
So what does contract? Well, this is a great suggestion. So payroll is going to be it's going to be, so this is a contract labor. So this is going to be more of like an independent contractor role. Okay, and it's related, so the contract labor is related to the crop production, right? So it's going to actually be like cost of labor. And we may not have a cost of labor account. We could add one, but what we're going to do is we're going to put this under, yeah, so that's what we're going to do. We're going to create a cost of goods sold account. It's going to be under cost of labor, okay? And then we're going to make this even more, well, yeah, that's fine. And then we'll go ahead and click save. Okay, so now we've got who we paid, what account it goes to. We'll click add. And then we bought some amendments. Who did we buy the amendments from? Acme. And so this is going to go on the cost of crop production. So this is the role of the bookkeeping, right? So you're going to have your transactions. You're going to have to look at every transaction, and then you're going to say, okay, what is this for? What account does it belong to? So we're just going through these examples so you guys get a good feel of like, okay, how it works. So this is a membership. One second, please. This is a membership. So this is with the Federation of Black Farmers. And so do we have any membership? professional memberships. Okay, so we'll put this under professional memberships. So we'll create an account for that. That will be an expense type account. And we'll put this under dues and subscriptions and click save. Okay, we bought some seeds. Okay, so we bought some seeds from Ira Seeds. Okay, what is that going to go under? It's going to go under the cost account, right? So more crop production. We'll add that. And we got a grant. We got a grant for $10,000. Okay, who gave us the grant? Black Farmer Fund. We got a grant from the Black Farmer Fund for $10,000. And that's going to go under, it's not a government grant, but we're just going to put it under here for this example. Okay, it could just be, the name could just be grants. We'll go ahead and click add. And we bought a tractor. So this is a 2-wheel tractor. That's why it's only $7,000. Okay, so what kind of account? This is the last one. Let's get some more participation here. What account would be used for this? It's $7,000. Good try, good try. It would be a fixed asset, right? Tangible property, more than $2,500. So this would go under a fixed asset account. That's going to go under equipment. Okay. All right, so we did our bookkeeping. We've recorded all of our transactions. Okay. So what's the next step, right? The next step is it's the end of the month. We get our bank statement. It's time to reconcile the account. So let's go to the bank register and see what our bank balance is. We have $93,908 in the bank. Why do we have so much money in the bank? Does anybody know why? Does anybody remember why we have so much money in the bank? The Outfit Capital Partners, right? We got a $10,000 loan from them, remember? So we're going to click on this button here that says reconcile. And you're going to do this with all of your accounts. So your checking accounts, you're going to reconcile your savings accounts, your loan accounts, anything you get a financial statement for, that's an account that you're going to reconcile every month, right? So it's just not the checking account, but it's the credit card account, the line of credit accounts, all of those accounts. So at the end of the month, this was the register balance. So we're going to say, okay, we got a bank statement. On the bank statement, it says that the ending balance is this amount. And let's say that it's the end of the month, which is tomorrow, and then we're going to start our reconciliation process. Now, if you did all of your bookkeeping accurately, okay, there's going to be a $0 difference between the register, all the transactions we just recorded into the George Washington Carver mutual account, and the bank statement. And so there is a $0 difference. And so QuickBooks, the AI just did the reconciliation for us. But basically what happened here, this is what happened. So you have your bank statement and you say, okay, there was a deposit of $10,000. Is it in the register? Yes. Okay, there was a deposit for $350. Is it in the register? Yes. And then you get into your expenses. Okay, was there an expense for $400 on July 30th? Yes. Was there an expense for $200? And you're just going through all the transactions on your bank statement. And you're just checking them off one by one. Now, if you did your bookkeeping right, there's going to be no difference between what you've recorded in your books and what's on the bank statement. And so if you have a $0, even if it's a penny off, you have a problem. So you have to go back and find, okay, where did I get the penny wrong, right? So usually it's going to be like a keyboard error. You typed a number that you shouldn't have typed, okay? So we'll go ahead and click finish now. And so we've reconciled this account. Now that we've reconciled the account, right, we're really close to the end of the bookkeeping process. So let's take a look at our financial reports. So there's this on the sidebar, there's a reports field. We click on that. We're going to click on standard reports. Let's take a look at our profit and loss. Let's see how we did for the month of July in our farm business. So the report period here says this year to date. We're going to change this to this month. So this option gives you the ability to kind of like choose how you want the dates, the period of time that you want the reporting on. So let's choose this month. Okay. All right. So this is our P&L for the month of July. Okay. Our farm had $20,150 in income. So we had $10,000 in government grants. We had $1,800 in other income. That was from the agro-tourism. We had $1,350 in poultry sales. And we had $7,000 in vegetable sales. Okay. Remember, we also received $100,000 into the bank account, but notice that that does not appear under income, right? Because that was a liability to us. And so we'll see that later on the balance sheet. Then we had our costs, right? So we had some contract labor costs. We also had some costs of crop production. So our total cost was $2,025. So when you subtract your cost from your total income, you get what's called gross profit. Okay, so our gross profit for this period was $18,125. Okay, after our gross profit, we get into the farm expenses. Okay, we had the bank charges, the charity, the contributions, the equipment rental, all the things that we just recorded. So all of those expenses came out to $5,425. Okay. That left us with a net income of $12,700 for the month. Okay. Now, there's one helpful thing we can do here that kind of gives a better. So we have this option that says compare another period. We're not going to compare another period, but we want to add a column for percentage of income. So we'll click Run Report. And so that's going to say, okay, $20,150 is 100% of our income. Okay, 49, almost 50% of our income came from government grants this month. Okay, almost 7% of our revenue, right, came from selling chickens. Okay, and then it's the reverse. So 8.81, almost 9%. I'll just say that almost 9% of our cost of crop production, right? 8% of our income, right, went to the cost of crop production, right? Let me find something else. So almost 9%, okay, of our expenses, of our income went towards field expense, right? So that gives you these percentages of income really give you a good idea of where you're spending the most money. You can look at that by the amount of money spent, but looking at it as a percentage of income is also helpful as well. Okay. So any questions about the profit and loss? Okay. Let's take a look at our balance sheet then. We're going to go back to our reports. Yeah, I agree. And then, so we're going to pull up the balance sheet. Again, we want to take a look at the balance sheet for this month. So the report period will be this month, and then we'll click OK. So this is considered what's called the modern view. I'm going to just click this little link here that says switch to classic view. Just a preference for viewing the report. Okay. So what I'm going to do is I'm going to collapse these accounts. Okay, very good. So basically when I say collapse accounts, if there were any sub accounts, it would roll up into the parent account. We don't have any sub accounts, so everything should show here. So the way the balance sheet is structured, okay, so your asset section is going to come first, then your liability section, and then you're going to have your equity section at the bottom. Okay, so first we're going to talk about assets, and then the asset section, there's going to be the current assets at the top, and then there's going to be the non-current assets on the bottom in the asset section. So remember, the current assets are anything you can liquidate into cash within your calendar year, your accounting year. And then your other assets are going to be things you can convert to cash, okay, after your calendar year. So we have $93,908 in the bank. Okay, we have $1,000 in breeding stock. Okay, and then we have $7,000 in equipment and $2,500 in fencing. So our current assets are $1,000. Our fixed assets are $9,500. Okay, and we have $93,908 in the bank. So that means the total assets this farm has is $104,408, right? Just over $100,000 or close to $105,000. Okay. So let's take a look at the liabilities. Now we have a loan, right, for $100,000, for which we paid a note on this month. So what's left on the note is $98,750. So those are our total liabilities. We owe almost $99,000. Okay. So when you compare the total liabilities to the total assets, you see that it's nearly like a 1-to-1 ratio, right? So nearly all the assets we have is nearly almost all of what we owe. So basically, you want to have at least twice as many assets on your books than you have liabilities. That's how you keep cash flowing in your business, that you have more assets than liabilities. In a situation like this farm is struggling. Why? Because for every dollar that comes in, that dollar has to go out to deal with a liability. Does that make sense? Okay. So then the last section is your equity. Okay. So the farmer was paid total $7,042. Let's take a look at what that was. So there was a $2,000 in compensation. I don't remember what else. Let's take a look. What else is there? Oh, the taxes. So there was the estimated taxes that was paid. So this is a sole proprietor. So those taxes paid are personal taxes. So that's why the owner's compensation was so high. And then there was the Netflix in the restaurant. So the owner took a total compensation of $7,000. Okay. The retained earnings is $0. Okay. So the net income is $12,700. That means this business has an equity or a book value. Book value means just like using the numbers that are on the books, not like what it would sell for on the marketplace, of $5,600. So the value of this business, farm business, is $5,600. Right? And so that's what the balance sheet is going to tell you. You want to look at your equity and say, okay, how much value did I build into my farm business over this period? Well, in this case, not much, but farmers struggled to get there. So that's part of the story. Last, we're going to take a look at our statement of cash flows. Okay. And remember earlier I said the statement of cash flows is going to show you how cash flowed in the business and flowed out of the business. It's going to be divided between operating activities, investing activities, and financing activities. Okay, so we had a total of $12,700 coming in cash from operations, meaning from selling things, right? Selling crops, selling livestock. We had an inventory adjustment for the breeding stock, so that's $1,000 that went out in cash. So the net cash that came into the business was $11,700 from our operating activities, operating the farm. And then from investing activities, okay, $7,000 went out in equipment, $2,500 in cash went out on fencing. Okay, so we had negative cash in our investing activities, $9,500. And then in our financing activities, we took on a loan of $100,000, but then we also had distributions to the owner, right, of $7,000. So the net cash that came into the business for this month was $91,708. So there could be a big difference between why you have so much cash in the bank, but why your business produced so little in sales or so little in net profit. So just because you have a lot of cash doesn't mean that your farm is doing very well, right? It just simply means that cash came from other than sales. Any questions about the statement of cash flows? No? Okay. So we've looked over our reports. We've done, some basic analysis. There's a lot more that we could do, but we really don't have time to go into more detail. We're going to go back to our settings. We're going to click on accountant settings, and we're going to close our books. So we're going to go to the advanced tab. We're going to turn this option on here to close the books. The closing date is going to be, it's still not loaded. Just give it a second. There we go. And you have two options here. So allow changes after viewing a warning, or allow changes after viewing a warning and entering a password. For some reason, it's not, looks like I think the page is still loading. So you have two ways of protecting your historical data. Setting the closing date takes the first step, like it gives you a warning if you're trying to change some historical transactions. And then a second step would be to add a password to that. Let's see if I can open it up now. Yeah, I'm not sure why that's not opening. Sometimes there's glitches, but we've closed our books for the period, okay? And what are we going to do next? We're going to do it all over again in the month of August. And then we're going to do it again in September. So we're going to, 1 second, I'm going to change the screen that I'm sharing. We're going to go back to this one. And we're going to share some resources with you guys. Oh, my screen is moving slow. Okay, so next up, conclusion. So here's some resources for the learning. There's a website called accountingcoach.com. This is a great website for asking any kind of bookkeeping question. It's very comprehensive. It's ran by an elite group of bookkeepers. I highly recommend it, and it's a lot of free content. There's also a website, academy.intuit.com. They offer a free bookkeeping course. So if you want to get into more details on bookkeeping and all the things that we talked about, there's a free course there. If you don't want to use software and you want to use spreadsheets, there's a lot of bookkeeping spreadsheets available on Etsy, so there's a resource for that. For people who do not have their employer identification number yet, I do recommend everyone gets an employer identification number, even for their farm, even if you are a sole proprietor, right? So there's a link to that, and then there's a link to the Farmer Tax Guide produced by the Internal Revenue Service. All right, so with that, let's take some questions, or if there's comments, anything you guys want to talk about before we wrap it up. Please, go ahead.
Greetings. I'm sorry. I did log on a little late, moving between, webinars. So I'm not quite sure if you covered this. But if you have a checking account and a debit card that every single expense goes on that debit card for that, for that checking account for the farm, can that just kind of be pulled up into QuickBooks, instead of having to manually do this?
Yes, there's two options for that. One option is to actually connect your bank account to QuickBooks, and then QuickBooks will download all of your banking transactions into QuickBooks. The second option is to download all your bank transactions into a spreadsheet, and then import those transactions into QuickBooks. Does that answer your question?
Yes, it does. Thank you.
Yes, ma'am. Okay, there's a question. I recently heard about this financial software for farmers called FinPack. created by the University of Minnesota. I am curious how that one is different from QuickBooks. Honestly, I am not familiar with FinPack, but I will look into it. And I can also say that generally there's not much difference. If it's created by the University of Minnesota, it's designed with farmers in mind. The main difference is going to be the language that you see in the program. But how the accounts that you need, asset accounts, that you need liability accounts, the income, expense, equity accounts, all of that is going to be the same. But you may just see that it's designed around the language of farmers. And that might be just the main difference. That would be my gut instinct. But no, I'm not familiar with FinPack. Another question, can I deduct all of the care of my honeybees for honey production, sugar treatment, and supplements? The answer is, it depends. If it's a hobby, no, you can't deduct any of it. But if it's a business, yes, you can deduct all of those expenses, no problem. If so, what's the category? Okay, great. So so honeybees for sugar. So the cost of sugar will be a cost of goods sold account, would not be an expense account, it would be a cost of goods sold account. Treatment also would be a cost of goods sold account, and supplements would also be a cost of goods sold account. So those would be the categories. And then you would just give it those names. You would create an account called treatment cost, cost of sugar, cost of supplements. As like for the honey sold, could you restate that, please? That's for the honey sold. As far as the honey sold, that would just be an income account.
Can you hear me to make it
Yes.
easier? Yeah, because my
Yes.
fingers are from beasting. So, I take care of the heat. I do a variety pack of honeybees. I do honeybees that I will sell for nukes next year. So I overwinter them. Then I also would be like selling queens bees next year, as well as expanding my honey production of colonies. So that's why I was wondering if that will fall under like what category? Because if a farmer buys fertilizer for crop production, I'm supplementing, and the sugars for making honey syrup when there's a drought, or there's no pollen or nectar. So I got to supplement to keep them alive, just like
That's right.
would for any livestock, because my bees are considered livestock based on IRS. So long story short, that's why I was trying to figure out if that would be the same like buying feed for cattle.
Yeah, we have bees here on our farm as well. And yes, those are expenses, and then they would be cost of goods sold expenses though. So it wouldn't be like a utility expense. You would put it under the cost of goods sold section of your chart of accounts. And you would just customize the chart of accounts for a honey business, right? So the template is just generic, right? The template must be customized for each farmer. Each farmer is going to have different circumstances. So you're not going to have like livestock sales, but you may have nuke sales as an income account on your books, as an example, or queen sales, right? That could also be an income account on your books.
Okay. Would that fall in line also with like classes, because I'm an educator as well?
Yeah, so absolutely. So if you have classes and people are paying you, right, to attend your classes, I would add an income account. I would suggest you add an income account in your chart of accounts for that. So you can know like how much of your money came from classes, how much of your money came from the sale of queens, how much of your money came from the sale of nukes, etc.
Okay. Also, last question real quickly. I'm juggling two different master beekeeping programs, one at Penn State and the other at Cornell. And I was curious if the time spent for doing any of these graduate programs, whether I'm, because I have to do, videotaping and testing, let's say, alcohol wash, those kind of things, as well as for the Master Bee program at Cornell, I'm going to need to do a videotaping of that. So is that categorized under like labor expense?
No, that is not, that is, yeah. So we're not, if the business paid you right? If the business paid you for that time, then that would be an expense. But as the farm owner, if you're not paying yourself, right, then there's not going to be anything to record, because bookkeeping is recording the flow of money, money going in or money going out. Your time spent, no money is moving, right? But the cost you spent to get there, like your travel costs,
Travel,
your cost of
food,
fuel,
all of that
yeah,
stuff. Okay.
exactly. You could take a mileage deduction for that. Okay. So those are some. Now, if there are some supplies involved, like you need to buy some supplies for the video. Okay. However, you have to understand that if those supplies are related, the primary intention for the video is related to like a degree program, or it's like a certificate you're going to get. Okay. It's questionable if that could be actually a business expense, right? Because that's not like something that a video that you're producing for the business. That's a video you're producing for the is it, you said this was a master?
Oh yeah, it's a master in beekeeping through Cornell. So basically, the
Yeah,
expense of just running my backyard apiary.
yeah,
It's just the
and the
expense
purpose
that you
of
just record. That just
yeah, and the
because
purpose
my whole purpose is just I'm a beekeeper.
yeah, and the purpose of all of this is to improve your competency in your business.
Well, actually, no, just to, demonstrate to people, because I'm a Black farmer in Vermont, just to demonstrate to them that, my style of beekeeping, which is mount-side beekeeping in Vermont, is specifically, non, let's say, invasive treatment. So I use essential
Okay.
oils and et cetera. So in doing that, I'm basically doing a study designed based on my beekeeping practices as a sideliner beekeeper, as other beekeepers, like the white establishment like Bob Binney or beekeepers in Vermont like Michael Palmer and so forth, have used that expense because they are invited to do a course or a class.
Okay. If there's no profit motive, then none of those are business expenses, not even the travel.
Got you. No problem. Thank you very much.
You're welcome. Any other questions?
Yeah, I'm just gonna jump in here. So at what point does, I don't know, the IRS like pipe up and say, if you're kind of struggling, like, are you sure this is a hobby versus like, this is a legitimate business? Like, what, I guess, like, what is what what are some of the ways to make sure you don't run afoul of like getting that ruling?
This is a great question. So I remember there's a Supreme Court case. So well, actually, it's a tax court case. So my apologies, I misspoke. There's a tax court case where this entrepreneur, he ran business losses for 20 years straight. So the Internal Revenue Service was like, this is not a business. This is a hobby. How can you run a business for 20 years and just have losses, right? So long story short, he won. And the reason why he won was because he could prove that he had a profit motive for 20 years. And the fact that he didn't give up, right, it's not it's not a factor, right? So if you have a profit motive and you're going to stick to it and you're just going to see it through to the end and you're not going to give up on your business, right? There's no actual limit on how many years you can take losses. That said, you must have excellent records and receipts, because if you don't, you will run afoul of the IRS, no doubt about it.
Okay, I got another question. So if you like, I'm just getting up and going. So I have like off farm income and I am not looking to do a draw, because I want to get the business up and going. And so, does that become an issue with quarterly estimated taxes if I'm not taking
An
a
issue
job.
how?
Right. So I'm saying, like, yes, quarterly taxes, I guess, if I sell products, but if I don't, I'm just asking, if I don't pay myself, if I'm not an employee
Okay.
and I'm not taking a draw, then I'm not responsible for payroll taxes, right? I'm just trying to confirm.
Well, you may not be responsible for payroll taxes if you're not taking a draw or you're not on salary, but you would definitely be responsible for estimated taxes if your business is making a net profit. So it's not just being a farm owner and taking a distribution that would cause a taxable event. Just having a net profit in your business without you taking any draw at all will cause you to have a taxable event. You still have to pay estimated taxes on your profits, even if you don't pay yourself.
Thank you.
Mm-hmm. Okay, let's wrap it up.
Sounds good. Thank you so much for staying so much longer and answering all these great questions, and just for the session in general. It was so great and so helpful, and yeah, just super appreciative. Like I mentioned, I'm going to send out the recording as well as the slides, some of the resources that were mentioned, and I think those are the main things. I don't know if there's anything else you want to add before we officially close out.
Yeah, I enjoyed it. I enjoyed my time here. I really appreciate all the questions and the engagement. And I really hope that people are able to get some value out of our time spent together today.
Definitely. All right. Well, thank you all. Hope you have a wonderful evening, and I'll be in touch soon. Thank you.